What's going on, everybody? Welcome back to the channel. Now, today we need to talk about a stock that I genuinely believe most investors still do not fully understand. And honestly, that's exactly why I'm so interested in it. Because while everyone else is chasing the obvious AI winners, the NVTS, the supermicros, the giant trillion-dollar names, there's another side of the AI revolution happening quietly in the background. And this company, it powers the entire thing. I'm talking about Navitas Semiconductor, ticker symbol NVTS. And if you've been watching this channel for a while, you already know I've been talking about this company since it was trading in the single digits, back when almost nobody cared, back when people were calling it just another semiconductor company. But now, the market is finally starting to wake up. The stock has exploded from around $17 to over $23 in an incredibly short period of time. And the craziest part? I still think we may be early. Now, before we go any further, just remember, this video is not financial advice. I'm simply sharing my own research, my own investing process, and why I personally continue adding shares to this company. So, with that said, hit that like button, subscribe if you enjoy AI stock breakdowns, and let's talk about why Navitas might become one of the most important AI infrastructure companies over the next several years. So, first off, what exactly does Navitas do? Because a lot of investors hear semiconductor company and immediately assume this company is competing with NVIDIA. That is not what's happening here. Navitas does not make GPUs. They are not building AI models. They are not training large language models. Instead, they solve one of the biggest hidden problems in AI: electricity. And this is something beginner investors especially need to understand. AI is not just software. AI is infrastructure. Every time ChatGPT answers a question, every time an AI image gets generated, every time a data center processes AI workloads, that requires massive amounts of electricity. And I mean massive. We're talking about power consumption levels the industry wasn't fully prepared for. That's why companies are now redesigning entire data center architectures, and Navitas is right in the middle of that transition. Now, let's simplify the technology because I know some of this can sound complicated. Navitas focuses on two major technologies: gallium nitride, also called GaN, and silicon carbide, also called SiC. These materials are more advanced than traditional silicon, and what makes them special is this: they handle electricity more efficiently. That means less heat, faster switching, smaller hardware, lower energy waste, and higher power density. And in AI infrastructure, efficiency is everything. Because if you can reduce power loss even slightly across a massive AI data center, that can save companies hundreds of millions of dollars over time. So while NVIDIA gets attention for the AI brains, Navitas helps provide the AI nervous system and power delivery. That's why I think Wall Street is beginning to reprice this company completely differently. Now, let's talk about why the stock suddenly exploded higher, because this wasn't random. Recently, Navitas announced new partnerships and developments related to AI power infrastructure, including major developments involving India's first GaN power IC family using Navitas technology. And this matters because partnerships validate technology, especially in semiconductors. The market wants proof that large companies actually trust your products. And Navitas keeps stacking those relationships. Not only that, the company has already been linked to next-generation 800-volt AI data center architectures. That's a massive deal, because the industry is shifting towards higher voltage systems to support increasingly power-hungry AI servers, and Navitas is already positioning itself there. That's what investors are reacting to, not just current revenue, future positioning. And the market always prices future opportunity before it fully shows up in earnings. Here's what I find fascinating. Most retail investors are still focused only on obvious AI names, but history shows the biggest returns often come from the secondary infrastructure companies, the companies enabling the boom. Think about the gold rush analogy. Sometimes the people selling the tools make more consistent money than the people digging for gold. That's how I view Navitas. Because AI cannot scale infinitely without solving power efficiency problems. And right now, the industry is desperate for solutions. AI racks are becoming denser, servers consume insane amounts of electricity, cooling costs are skyrocketing, power bottlenecks are becoming real, and Navitas is building products specifically for those challenges. That's why I believe this is more than just hype. There's actual business thesis here. Now, I also want to be balanced here because when stocks go parabolic like this, risks increase, and beginners need to understand this part. Navitas is very volatile, very volatile. This stock can easily move 10, 15, even 20% in a single day. So if you're investing in a company like this, you have to expect volatility. Another thing, the company is still relatively early compared to giant semiconductor leaders. This is not NVIDIA. This is not a trillion-dollar company. So expectations matter. And when expectations rise quickly, stocks can overreact both upward and downward. Even good earnings sometimes aren't enough once momentum gets extreme. So personally, I love the long-term opportunity, but I also recognize that the stock could absolutely pull back aggressively at times. That's normal for emerging growth companies. Now, here's the important question. After this huge run, am I still buying? Personally, yes, but carefully, because for me, this is not a short-term trade. I'm looking at the next 5 to 10 years. And when I step back and look at where AI infrastructure is heading, I believe power efficiency becomes one of the most important themes of the entire AI era. Not optional, necessary. That's the key difference. The world needs more efficient power delivery, lower heat generation, higher density server systems, better infrastructure scaling, and Navitas directly benefits from all four trends. That's why I personally believe this is more than just hype. There's actual business thesis here. Now, let's talk about what happens next, because I think we're entering a phase where Wall Street starts taking this company much more seriously. And here's why. Once analysts begin modeling Navitas as an AI infrastructure company instead of just a charger chip company, valuations can change dramatically. Narratives matter in the market, and right now, the AI infrastructure narrative is one of the strongest narratives on Earth. That's why stocks connected to AI cooling, AI networking, AI data centers, AI power systems have all started seeing explosive moves. Investors are searching for the next layer of the AI boom, and Navitas fits that category perfectly. Now, does that mean the stock only goes up from here? Absolutely not. There will be volatility, there will be pullbacks, there will probably be fear cycles. But long term, I think this company has positioned itself extremely well. And honestly, there's a bigger investing lesson here too. A lot of people wait until stocks already explode before researching them. But usually, when everyone agrees a company is amazing, the easy money is already gone. The biggest gains often come when a company is still misunderstood. That's why research matters, that's why conviction matters, and that's why I spend so much time studying businesses deeply before the market fully recognizes them. Because when the thesis finally plays out, moves like this can happen very quickly. So overall, here's my view on Navitas. I believe this company is becoming one of the most interesting AI infrastructure power plays in the market today. Not because it builds AI, but because it helps power AI efficiently. And that distinction matters. The company sits directly at the intersection of AI, energy demand, data center scaling, and power efficiency. That is an incredibly powerful combination. Now, again, there will absolutely be volatility, and if you're investing in emerging growth companies, you need to be mentally prepared for that. But personally, I continue holding shares. I continue researching the company aggressively, and I still believe the long-term opportunity here may be much bigger than most investors currently realize. So let me know your thoughts down below in the comments. Are you bullish on NVTS? Do you think AI infrastructure stocks continue outperforming? Or do you think this rally has already gone too far? And if you enjoyed this breakdown, make sure to subscribe because I'll continue updating you guys on everything happening with Navitas and the broader AI market moving forward. Appreciate all of you watching, and I'll see you in the next video.